Hi, this is Optimus Futures, and we're back with our weekly roundup of key futures markets for our viewers. For this week, we'll be analyzing the markets as they closed on 11th of May 2018, and we're going to be starting off with the S&P 500 E-mini futures market. Now, this is a market that had some very important developments last week. Most notably, of course, we had a strong bull run post pretty much the entire week, and the special thing behind this strong move up here was the fact that every single trading day the market was able to close above where it opened for the day, which is a special feat for a market that has been largely consolidating and tightening up into a wedge pattern formation here for the past several weeks. And of course, if you can see, one of the major reasons why we had the bull run the last week in the first place was that the market had potentially broken out of this wedge pattern formation here. And the reason why we say potentially is because even though we do actually see the market kind of breaking past this descending resistance trend line, we also note that there hasn't really been a pullback so far back towards this resistance trend line, and the market hasn't yet shown signs of a textbook breakout pullback continuation play that you would typically expect of a confirmed breakout. But we definitely do have the market popping out of this wedge pattern over here, and what we're noticing here is the fact that the market not only was able to penetrate and close above the resistance trend line from the wedge pattern, it was also able to close authoritatively above this prior swing high over here that really didn't provide any kind of resistance here for price at all. So even though we're looking at some really good bullish strength here for the moment, which makes us believe that if this momentum continues, the market could well just hit this swing high over here, which is a more important one. Of course, we had two instances where price found resistance here, just underneath the 2800 level. We believe that's where price could very easily be headed this week if the bullish momentum continues. But we're also considering the fact that the market may potentially pull back to test this resistance trend line, possibly as support before continuing on. And of course, we have that flip side consideration to factor in here as well, which is that if price really doesn't hold as support at this trend line over here, it may just continue to pop back, and we will basically just end up in another consolidation phase for this market. So given all those situations and circumstances that could potentially play out, we're still, despite the fact that we're looking at a very strong bullish run here, we're not exactly confident that we're going to see this just continue to mount here, and the market just will easily push the 2800 level over here and possibly look for higher price levels. We're not really getting carried away by the strong bull run that we've seen here. Like we said, the market may as well pull back to the resistance trend line over here at least to try and test it as support early on in the week, because even though we're looking at all green candlesticks here pretty much for the entire last week, the last couple of candlesticks were small in range, which is the distance between the low and the high of the candlestick wasn't that much, which to an extent indicates lower trading volumes and just lower interest from the bulls in the last couple of days. And that could actually provide a platform for the sellers to at least come into the market for a little while, maybe for the first half of the week as price tries to pull back to this resistance trend line over here. But overall, we're just optimistic about this market and the way that it has basically broken out of this wedge pattern over here. We're still looking forward to the market continuing its way up eventually, where we all have this the 2800 over here as a definite target for the market if the bull run on this market continues, and that's what we will be expecting, although we're factoring in the possibility of the market trying to pull back to this resistance trend line and give us a more textbook breakout pullback continuation breakout play. Okay, so the next market we're going to be looking at here is the light crude oil futures market, which is basically continued on with the bull run that we've been seeing for this market post for the past several months. Earlier on, we've been talking about how the market had sort of stalled underneath the 6600 level. We had a couple of major bounces off of the level, and then eventually price was able to break past it. pulled back to it, tested it as support, and just continued its way up. The past week we had a very important development for this market as well, in the sense that the market was able to basically push past the major's $70 big round number. We did have some kind of resistance coming at the level. If you look at the candlestick over here, we did see some selling come into the market. The market sort of pulled back underneath the 70 round number for a while, but within the same day, the bulls were able to retake control, and the market was able to eventually push way back above the 70 round number and also close above it for the week, which is an impressive sign and possibly a signal that the bullish momentum here will likely continue as we go forward into this week. Long term, we're still looking for this market to test the 75 major support and resistance level, and possibly price levels a little higher than 75. Because as we zoom out of this market, we can see that the $75 mark pretty much lines up with some very important past swing lows, very sharp swing lows that could definitely be attracting price here for sure. So that's what we're looking forward to for this market. We're just expecting it to hit 75 in the coming weeks. Okay, so next up we're going to be looking at the gold commodity futures market. This is a market that continues to be stuck within a very well-defined range, of course marked by the 1300 major round number as the floor and the 1350 major resistance level as the ceiling. And the market, as you can see, is pretty much stuck within this range here and just continues to be stuck. And it's been trying to test and possibly break past either of these two levels and failed each time miserably. Over the past week as well, as the market was basically close to the 1300 round number, if you recall from our last weekly analysis for this market, we had talked about how another attempt for price to try and break past the 1300 round number couldn't be factored out. Simply because the market was just perilously close to this support level back then. And you can see that this week the market did actually push right back down to possibly test the 1300 level and break it towards the downside. It was unable to do so, and the market once again just bounced right off the 1300 major round number support level. And so it's basically just stuck within this wide range over here, and our original analysis that has been in place for a while for this market just continues to be in place, which is that we really do not expect this market to do much in terms of posting a strong move in one direction such as this, unless the market basically breaks past either the 1300 round number support or drags further up again towards this 1350 resistance level and eventually breaks this level. So unless we see one of those two occasions unfold, we really just expect this market to continue to consolidate and be mostly indecisive and choppy. Okay, so the next market we're going to be analyzing here is the Euro currency futures market, which was another really interesting market to follow last week. If you recall our analysis from last week for this market, we had talked about how despite the fact that the market had been really dropping very hard, of course it had broken out of this wedge pattern over here. And even though we didn't really pull back to the pattern at all to test it as resistance before continuing on, we just had a very sharp bear run over here, and the market just continued to drop very hard. And even though we were in the middle of all of this sell side momentum coming into the market over here, we still notified that we weren't extremely confident of this momentum to continue for long. And the reason is that as we look towards the left, we have a major period of consolidation over here. We have several levels over here that we identified as potential trouble areas for price, and we of course also have the 1.2 big round number right around here, precisely where the market closed on Friday last week. And so just looking at all of this heavy support underneath all of these, underneath this strong move that we were seeing from the sellers here, we notified that it's probably going to be hard for the market to continue to sustain this momentum. And past week actually we saw part of that story unfold. The sell side momentum kind of halted right at this major support and resistance level. Of course, we had multiple occasions of support and resistance at this level in the past as well, and so no surprise why the market really decided to bounce off of this level. And really for the week, we just had the first half of the week belonging to the bears, and the latter half of the week kind of belonged to the bulls as the market pulled back. And it's now pretty much sitting at the 1.2 big round number. Now this is going to be the important and interesting test for this market. If the 1.2 big round number really doesn't hold as resistance and we do not see a sharp move right back down to basically once again combat all of these heavy support areas in the spirit of consolidation to the left, we could well see the market actually push right back up above the 1.2 big round number to basically mark all of this move that we had earlier on underneath the 1.2 big round number and into all of these major support levels as part of a fake out, and the market could actually just push right back up. And here's the interesting scenario that we're working out for this market. If the market actually does pull back above the 1.2 round number and the bulls are just able to build on this momentum that we've had as the market basically bounced off of this level over here, we see very little resistance in the path of price over here. So the next major important level that we believe could come into play here, if the market is able to penetrate above the 1.2 round number again and just continues with the bull run over here, we're seeing the next major trouble area just underneath this prior swing low over here. And so that really paves a more easier path for the bulls to just come in and continue to take price their way. So we're watching the 1.2 round number and all of these horizontal support and resistance levels here very, very carefully. And as we had expected, the market has definitely bounced off of these important areas over here that we had earlier identified. Okay, so finally we look at the 10-year Treasury note futures market. Now this is a market that has been in a bear run for quite a while now, and just continues to build on more bearish momentum here. Although in the last couple of weeks we really haven't seen new lows for this market, and the reason has obviously got to do with the market basically pulling back after breaking out of the 120 round number early on. It's really been trying to pull back to this market, retest it as resistance, and then just basically continue its way down. In our last week's analysis for this market, we had pointed out this bearish pin bar over here as an indication that the market had definitely pulled back to the 120 round number and found some resistance as well at the level. Although we had identified that a single candlestick here, even though it looks like a really nice bearish pin bar here, isn't probably sufficient for us to say that the market has found definite resistance at the 120 round number, and that we would basically expect some more selling coming in the market right after the formation of this bearish pin bar over here to suggest that the market has found definite resistance at the 120 round number. We pretty much had that play out the first couple of days. Last week the sellers were really dominant, which tells us that price surely found a lot of resistance at the 120 round number, or enough resistance to possibly allow the market to continue its move down. And we're really just seeing the foundations for it. The market had, for the most part, during the latter half of the week, been consolidating, but overall it still looks very, very bearish to us. And we expect the market to just continue its way down, possibly break this former swing low during this week's market activity, and possibly post a new low for this market for the week.